Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager. Hello, I'm the senior trader at the Forex Super Model, and this is the data cycle review for week, Monday the 28th of the 6th to Friday the 2nd of the 7th, 2021. We're going to do a slightly shorter version going forward, but basically it's our version of the economic calendar. We've modelled tier 1 and tier 2 data, and we've condensed it into a sort of a data cycle. Right, just to remind you then, the other sister video we do is the flow cycle for the same period, the 28th to the 2nd, and if you look at that, you can see that over the week, that period, the dollar, the USD was the opposed positive driver at plus 153. Front and back door flows mainly coming out of the euro at minus 110, out of the pound at minus 96, and the yen was the positive rock at plus 53. Activity was a relatively low plus or minus 206. Right, so let's make a start then. So what's the China data cycle doing? Well, China data cycle basically is neutral to negative, not really firing. The dollar data cycle is definitely positive, so it's on the up. German data cycle is on the up. Euro data cycle is on the up. Right, and let's get rid of this. What we got next? Yen. Yen data cycle is on the up. The pound data cycle is on the down, having been previously very strong in April and May. The CAD is on the down. The AUD is on the up. What we got? The NZD is on the up, and the Swiss franc is neutral to on the down. Right. So if you look at that in basic terms, you've got this cluster of positive data cycles there. So you've got the dollar, the German, the euro on the up. You've got the AUD and the NZD on the up. And then you've got China, the yen, the pound, the CAD, and to a lesser extent the Swiss franc, all soft and on the down. So, okay, that's a bit of context there. I know the markets don't pay total attention to data cycles, but eventually they do have a bearing, and it adds weight to the positional trades. Anyway, right, so what's been going on in the majors then? So we've got dollar, euro, yen, pound. Well, the dollar index was pumped above its model top on the Friday briefly, and then it came back after the NFP, despite it being positive. Bond yield, the 10-year bond yields were suggesting that the dollar wasn't really going to move forward. It was there about half marks in terms of the modelling. So basically, the dollar had this sort of look to its complex. The euro, likewise, has got that look, sort of being the anti-dollar, if you like. Not that we particularly like that term. Now the yen. Well, the yen. If you look at the actual weekly flows, the yen was positive, sucking in secondary positive flows, so slightly on the up, and the pound was being disliked, and arguably you could say, well, maybe it should be disliked because it's its data cycle is negative here. So, but that's obviously a bit simplistic thinking. So, what's going to happen next week? We've got the AUD in play earlier next week. We've got AUD retail sales and the AUD rates decision. Then you've got this sort of like asymmetric response which we've been banging on about between the AUD and the NZD. The NZD, the market's been all over the divergence between the central bank, saying that the NZD is always, is going to tighten sooner. Everything's great in New Zealand, and everything's rubbish in the AUD. Well, it's not true. The AUD has been below the radar, punching away, a very positive outlook, and you've got this asymmetric sort of response to the data, which will ultimately change with a bang. And now we're looking sort of AUD NZD in terms of going long we've had to come back to the minimum. In fact, I think we had in another trade, so we're slightly above the minimum. So there you go. But this is likely, and the AUD in particular is likely to be a particularly good long-term long trade. The NZD, it might well have all the glory at the moment, but it's been there and done it to a certain extent, particularly in terms of the AUD NZD in positional terms. So we're really going to be fearlessly looking at piling into the long AUD NZD, and probably AUD USD to a lesser extent. So USD, so long. So that's the sort of way, and obviously it's going to get really jerked about early next week with the retail sales. If the retail sales come in soft for Australia, that will be even better for us, because it will give the market an excuse to pump it down a bit further before it goes up. So it's the old we're hoping for bad news so that we can get in better, but we'll see. And then the Australian Reserve Bank of Australia will then inevitably be dovish, and so maybe push it down a bit further. So that's the scenario. We've curtailed this data review video slightly if you're used to looking at them, but the basis is there. So I hope that was useful to you. Try and catch the sister flow video. If not, see you next week on Monday for the market review. Thank you very much.